Yo, what's up, everybody? Monday, June 2nd. It's been raining all day here where I am in Florida, kind of stormy. Yesterday, June 1st, was the official start of the hurricane season. So that's not cool. I'm not looking forward to that. Yeah, today was one of these like tropical rain days all day. So yeah, kind of dreary, I guess. Anyway, let's talk a little bit about the markets. This morning when we were down, I sent out an email to my subscribers saying to buy that dip. On Friday, we had first of the month payments. That was a 109 billion flow day with, I believe it was a 93 billion net flow. So very, very strong, but that's what happens on first of the month days. And I said, you know, the initial reaction from these big reserve dumps, they're negative. They've been negative since we've been on the debt ceiling. So Friday we were down, this morning we were down, but then I figured, you know, we'll probably recover from that. There's been a pretty quick recovery from these reserve dumps, and one reason is that bank capital has risen now. It's at the highest level in a month. So the more bank capital in the system, the more reserves it can handle without that destabilizing effect. So that's good. So with this increase in bank capital, and don't forget, the Fed is still paying the banks interest on reserves. So the Fed is basically writing checks to the banks. So capital is increasing, as a consequence of that. I mean, it's just going to keep going up. This is another thing, like, why are we paying interest? Why is the government paying interest to financial institutions that don't need the money? Like, it's really incredible. They're going to be cutting Medicaid, but yet we're transferring literally hundreds of billions to the banking system. I mean, it's just, when you really start to think about this stuff, how kind of ridiculous it is and unfair, I think, too. I mean, you could really make yourself crazy, but I'm not going to get into that right now. So we had a 109 billion leading flow on Friday. We probably had some more today. I'll see it in the numbers tomorrow. So, folks, the flows are, let me backtrack a second, and I'm just going to say, like, last week I put out a video and I said I was cautious, all right? See, I'm going to go back and I'm going to go over the things I said. I said I was cautious because, first of all, I was observing the fact that net government transfers were falling when you look at them year over year. That stopped. Okay, at least for now, that has stopped. And actually, in the last 2 weeks, I've seen an increase in net government transfers. So that trend looks like it might be turning around. All right. I also was citing the tariffs and how we're running at 25 billion a month, and that's a tax drain of 25 billion a month. Nevertheless, and I said, well, if that keeps going, that's fiscal drag, all right? But I just got to tell you that these leading flows, they're just going up and up and up. So I'm not cautious at this point. I have to switch my outlook because I don't see any deceleration whatsoever in these leading flows. And I don't even see it now in the net government transfers. I mean, it looks to me like these are turning back up again too. So what this means is that, if you use the swimming pool analogy, that water coming out of the pipe into the pool is flowing at a really, really powerful rate. Volume of water, the velocity of that water coming out, it's just huge. So I mean, you're not going to have any correction in risk assets. That means gold, that means stocks, that means commodities, that means oil. You're just not going to have any correction in risk assets with these kind of flows. And I'm just going to have to wait and see what happens with the tariffs after the 90-day postponement is up. And also we got to see what happens with the budget, because everybody's saying that's going to increase the deficit, which of course I don't use that term. I don't say the deficit, I say net government transfers. And I've been saying for weeks now that I just don't take at face value what everybody says. I wait to see the numbers. Just like I'm telling you right now, like I see the numbers and they're huge, and so the market's going to keep going up. All right. So there it is. Not much more to say. I mean, I just, I look at that, and that tells me what's going to happen in the financial markets. So until I see something change there, that's the conditions we're in right now. Those are the conditions we're in right now. So until I see something change there, we're in a bullish mode. And like I said, that applies to risk assets, stocks, gold, commodities, copper, things like that. And it's not necessarily going to be a good thing for the bond market, because bond players are going to be looking at strength in like gold. They're going to be looking at strength in stocks. They might see strength in the underlying economic data, and they're going to extrapolate that into like, inflationary, the Fed's going to have to cut rates. Actually, the actual reality is that when you're adding all those reserves to the banking system without the ability necessarily to drain them, I mean, I've seen the banks now moving more of those deposits into the RRP, the Fed's reverse repo facility. When you're piling up reserves into the banking system, that's natural downward pressure on interest rates. I mean, that's just a big supply of money in the banking system, which drives the overnight rate down, and that tends to percolate through the entire curve. Not immediately, but over time. But we got the bond crisis. Oh yeah, I forgot to open with that. Bond crisis update. The 10-year yield went to 4.46 today. So we're still within the Fed's target range of 4.25 to 4.5. Anyway, it's kind of a dreary. It's still raining here today. I guess it's good for the plants. We've had a dry spell here, so I don't have to go out and water the plants today. They're getting the natural watering job done, thanks to the weather. And that's it, folks. That's it for today. Please like and subscribe. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.